So we are the co-founders of European Blockchain Convention. We'll do a little warm welcome here, explain a little bit more about our history, a little bit of logistics, and then we'll get started with the panels. So I hope you're excited. Maybe we should start with a little big applause for all of you. I know you're coming from, I don't know how many different countries. So yeah, let's start with a big applause. Yeah, okay, so it's been some very hectic days, weeks, months, but we made it, so that's great. Yeah, Daniel, do you want to say a few words and then I'll continue?
Yeah, first, thank you very much to all of you for coming. I know it's hard to fly from all these countries to here to an event, so thank you very much. Many of you have come in past editions as well, so thank you very much for keep coming to our events. As Victoria said, this is the 9th edition of the event. We started back in 2018. And so it's been a long journey, but I can tell you this has been the most difficult edition for all of us. First, because of, well, you may have heard of the bear market, right? So it's been a bit difficult, maybe more than past years, to, like make people come and everything. So it's been really difficult on that side. So thank you very much again to all of you who came, like partners, speakers, sponsors, staff, everyone. And also because of, as you know, in the past we've been more like a conference. We've done it in a hotel, so it was rather a conference. So this year, as you see, there's much more logistics. So we have stands, a big hackathon area that we can talk about it a bit more later. 3 stages. The 3rd stage, which is right here, there's gonna be startups pitching all day and tomorrow. Then there's also one-to-one meeting area for mainly sponsors or press. And the exhibition, there's an area also for games. So as you see, many logistics, which has been a bit difficult to organize. To give you a bit of background, I'm Daniel, co-founder also. None of us, we come actually from events, so this is pretty new. We still get a bit nervous when we say we organize events, right? We both come from finance. So 5 years ago, Victoria was in private equity, buying, selling companies in an asset management firm. I was like trading bonds, like interest rates, mortgages, stuff like that. But then Victoria, who's really good at convincing, we were colleagues at the time, right? She told me, oh, we need to get into crypto. It's the new thing in the world, right? So we started back looking into it. We got really interested about the applications of crypto and blockchain into finance. So I said yes, and then here we are.
Well, Daniel, I asked you in 2017 and you said no. I actually asked him in 2017, hey, how about we do a big blockchain conference and bring together the whole industry? Because we were used to this from the finance industry, going to big conferences. At least I would go to big private equity conferences. And he was like, nah. Then the year after, in 2018, I changed a little bit the strategy and then I managed to convince him. So the first time he actually said no. But here we are, almost 6 years after, with the 9th edition. I'm happy he said yes, back in 2018. Yeah, so warm welcome to everyone. As he said, we have a hackathon area in that corner. We have some hackers working there. The idea is not that you go and interrupt, but you can talk to them if they leave the area. They should be concentrated working. We have different networking areas, a DeFi lounge, a TradFi lounge, an exchange lounge, gaming and NFT lounge, where you can all go. Oh yeah, and then the startups and VC lounge. Then we have the visionary stage over there, and we will have the startup pitches over there. Yeah, so it's 3 stages, but all the time you'll have stuff happening in here, Coreo main stage, sponsored by our sponsor Coreo, and then visionary stage. And then the startup pitches are only going to happen, we have, I think, 3 blocks today of 1 hour, okay? So it's not all day. What else do we need to say? Oh yeah, so if you are a VIP pass holder speaker, you have access to the VIP area over there. There's a big sign where it says European Blockchain Convention, and then if not, you can buy food and drinks here in the food corner here. Wait?
Yeah, so also a bit more about logistics. So on this stage, we'll have Carrie, so she's lovely, you'll meet her. She's the presenter, host for the whole day today here on main stage. So she'll be leading all content here and introducing all panelists. And so what else? Maybe to break up a bit the ice, maybe we can all stand up now and introduce you to the person next to you. Like, for example, basic things like who are you, like what do you do, where are you coming from, so whatever. So please stand up. Let's break a bit the ice. I see
all investors are attacking this bear market, and I guess Bitcoin just never got the message because it decided to go on a tear on Monday and Tuesday, and it's continuing this morning. So I think my first question was going to be, like, what are the strategies that you're seeing when it comes to a bear market? But it probably makes sense to begin with exploring why Bitcoin is up so much. But even before we get to that, I mean, maybe Afonso and Stefan, why don't you guys each just take a minute, introduce yourselves to the audience, and talk about what you do.
Okay, maybe I can go first. Good morning, everyone. My name is Afonso. I'm the head of innovation at Banco BPI, and one of my roles is exactly to accompany everything that's going on in this crypto markets, blockchain, and try to understand how, from the traditional side of finance, we adapt to all of this, and we build on top of all of this.
Right, morning. My name is Stefan Kimmel. I'm the CEO of M2. M2 is a fully regulated crypto exchange and investment platform out of the UAE in Abu Dhabi. So we offer everything around trading, buying, selling, spot and futures, and as well as our yield-bearing products, which are in the bear market the most popular ones. So for instance, we offer earn plans with yields of 10% on Bitcoin, 10% on ETH. That's kind of a key thing we do. And super excited to be here as well, as we are trying to get licensed globally as much as possible wherever regulation exists. And Spain happens to be the next country where we're filing for a license. So very excited to be here today.
So Afonso, let's start with you. I mean, what's going on from your perspective, and in particular, its sustainability?
So I think that we come from a couple of difficult months, right? That's why we had the title of bear market, which is also, we were discussing before the panel. It's normal, right? New type of asset class, a lot of different stuff going on here, be it from the technology side, be it from a more financial side, and asset classes have ups and downs, right? And I would say that from a traditional finance perspective, we have a lot of clients asking about this space. Should I be in this space or shouldn't? It's difficult to time markets, okay? I could have exactly this same conversation if we were talking about equities or bonds, right? And I think that we need to take the conversation out of that part of, is it going up or down, and just deciding if you want to have exposure to all of this, okay? Short-term factors to why it went up so much since the beginning of the month, really no idea in reality.
So I know Victoria kind of did a survey before we began as to kind of where everyone's from. If it's not obvious, I'm from the States, Philadelphia. We saw it about 2 weeks ago when a trade pub published what turned out to be a false report about the BlackRock offering being approved, and now that we're starting to see real progress again, in the US at least, that's the main driver. Stefan, I'm curious, like, do you agree with that, or is there some other current underlying this bump that people are missing?
No, I mean, the short answer is absolutely the key driver. Even the last 2 days, I think the pump we've seen is mostly around news regarding the ETF. I think if you look at the bigger drivers, though, it seems like the space is in an inflection point. You see the first 2 years after Bitcoin started, it was all in a macro environment of quantitative easing, declining interest rates, partially negative interest rates. So there was a lot of excess capacity that was pumped that didn't have anything else to go and was pumped into the crypto space, which led to a lot of devaluations we saw then. A lot of the dump that happened the last 2 years was the opposite. So interest rates were going up and money and liquidity was withdrawn from the market. Paired that with all the problems and issues that happen inside of crypto.
Interest in this space, but to do something here, they need the regulatory clarity, okay? Maybe not the specifics, but at least the big picture. You need to have some comfort to make sure that You don't get into something and then you need to adjust. So I think that you have a number of players that will end up entering this market once MiCA is live. Okay.
And when you talk about regulatory clarity, I mean, there's two areas in particular that I think investors really want to feel comfortable with. One is understanding the tokens themselves and making sure that, for instance, insiders don't have too much control, there's not hidden pockets of money, that if there's lockups they're going to be adhered to, so on and so forth. And then from the exchange perspective, I mean, we all saw what happened with the collapses of FTX and BlockFi and Voyager and Celsius, and I could go on, and that was really more of a risk management point of view. Which one do you think is more important to your clients, or maybe it's both even, but I'm curious your thoughts there.
I would say both, okay, in different, almost equal weights. But I think that the key point is that with MiCA, you get like in the financial world, people are used to regulation, right? And you get sort of a updated blueprint to how capital markets function in other types of instruments. You are transposing that to the crypto space, to the blockchain space, to the tokenized asset space, and that gives a lot of confidence. Even if you say that maybe we could comply with all of this without having to have regulation, but for a lot of people that part is still very important.
Democratize the idea of digital property, okay? So the idea that there is real value in digital property, okay? And that part, from a traditional institution, it interests us a lot, okay? A lot of hype, okay? So we went now through a difficult cycle, but I really feel that there is a very big space for digital property, be it in the form of NFTs or others in the future, and that's a space that we are actually looking into, trying to understand as a bank, how can we develop the infrastructure to be prepared for this.
So it seems like it's a lot more than cartoon monkeys and pixelated.
Yes, I would say that it's a lot bigger than that, and we are actively working on understanding how a traditional institution can actually be positioned in the digital property space, okay? Let's keep away from the monkeys for now. And we are here with the partners that we are working with this. They are called Self-Focus. They have a stand here. It's interesting to pass there to see what's the perspective that Self-Focus is bringing to this blockchain.
Yeah, it's funny. I have 3 daughters. They're 7, 5, and 2. My 7-year-old, she's been asking the Tooth Fairy for Bitcoin, and the Tooth Fairy has obliged, and then she asked the Tooth Fairy for a Bored Ape, and she was very disappointed last week. Just really quick before I get a couple questions, Stefan, what are 1 or 2 projects or tokens that you find particularly interesting that are kind of flying under the radar?
That's a good question. I think all the ones that are interesting are not under the radar, at least none I can think of that are super secret and not flying.
Okay. Afonso, what about you? Is there anything that...
No investment recommendation specifically, but I would say that as always, I don't think it's a good way to make investment decisions based on being on a bull market or a bear market. Okay, you need to have stronger convictions in that.
So everyone's keeping their cards close to the chest, which is really fine. Maybe they'll loosen up a little bit later at drinks or something. We have about 3.5 minutes. Does anybody have any questions?
Private networks are good to test, and public networks are good to trade. Because what I mean, this have no sense a private network if you have short positions and long positions with a big spread between them, because they are not crossing. The bid and ask will not cross. You are only going to optimize your process, but the operations will not be factible in that kind of networks if you don't feed that network with a lot of volume, and probably the volume will come in through public networks.
I think we have time for 1 or 2 questions if anyone in the audience has. Down here in front. And we're going to bring you a microphone.
Good morning, everyone. First of all, thank you so much for coming here. It's great to see a full pack house. And my name is Bilal Jafar. I cover crypto and fintech for Dow Jones in London. And today we're having a really, really interesting topic to discuss, the digital asset lifecycle. And nothing better than to have these prominent names with me on stage. Because the entire purpose of having these events is not only networking, but I do believe that we can discuss some of the most important topics going on in the industry and what the future might look like. So without further ado, I would like to introduce my panel, and starting with you, Jonathan, please.
Thanks. Yeah, so I'm Jonathan. I'm CMO and head of platform strategy at Swire. Swire is a joint venture formed by the banks Standard Chartered, LBBW, and Decker Bank. And our aim is to create a financial infrastructure from and for financial institutions.
Hi, I'm Nadia Filali. I'm head of innovation and development in Caisse des Dépôts. Caisse des Dépôts is a French public group and a French public bank. And we are working on the subject of blockchain and digital asset from many years now. We began to work on that in 2015, and we are also a custodian on digital asset for our public clients, and working on the subject of tokenization of assets already and on the IDs.
Hi, I'm David Cunningham from Citibank. I lead our strategy and partnerships for digital assets across our payments business. So we move about $5 trillion a day in that business, and what we do is just explore all areas where blockchain and other technologies can help accelerate what we do to benefit our clients.
Good morning all, nice to be here. My name is Rajiv Bamra. I am the head of strategy and operations for DeFi and digital assets at Moody's. What I and my team do is we try to identify operational risks and technology risks and evaluate how they would integrate with the known financial risks based on the methodologies and frameworks that exist today for the traditional finance ecosystem.
Hello everyone, I'm Margaret Hodgkins. I lead strategy in EMEA at Blockdaemon. We're a blockchain infrastructure company. We run close to 100,000 nodes, but also provide staking infrastructure as well as wallet tech as well. We're backed by some of the largest financial institutions in the world, including Citibank, and Goldman and JP Morgan.
Well, thank you very much for the introduction.
Assets in mind before even we tokenize it, and find the need for the kind of efficiency it would bring if blockchain is used for that particular asset. So that's one thing. But the difference between the two ecosystems is, we've mentioned this before, 24/7 availability and accessibility, a huge difference. I think traditional institutions are going to use that as much as possible by introducing new products. But at the same time, with digital finance ecosystem being integrated into traditional finance, there is also more market maturity that needs in the digital finance ecosystem, which exists only in the traditional finance, and the kind of products you can issue in the existing regulatory framework can only happen on the traditional finance side and not on the digital finance side yet. So we already spoke about the benefits of the digital finance ecosystem, but I think there are benefits on the traditional side which the digital finance ecosystem can make use of and learn from, and probably the integration will help both sides in the long run.
Bond?
Yeah, the only thing I would add is I think it's good. I think the custody space and the difference between those two spaces is super interesting, and I'm personally very interested to see how that one plays out. Like, the difference between the two in a minute is one is highly regulated and one is like not regulated whatsoever on the digital asset space. So if you're a traditional custodian, for every $1 you custody, you have to either be insured for that $1 or you need to hold that $1 on your balance sheet. Those rules will come to digital assets through MiCA, and I think the United States is still figuring it out. But when they come, it'll be very interesting to see who sinks and who floats and what firms come out on top, because a lot of digital asset custodians are currently working to a runway, as there are a lot of people in the digital asset space. So they certainly don't have capital on balance sheet, and the insurance market for digital assets isn't necessarily mature enough right now to insure these digital asset custodians. So I think that's an interesting space, like the way custody of digital assets, custody of tokenized securities pans out, and depending on how much those native digital asset custodians mature in the next sort of half a decade, could play into like who necessarily gets that prize that David alluded to.
Jonathan? Well, connecting to the aspect of key differences, right? I thought there's one major key difference that I think we haven't discussed yet is actually the conscious choice of the infrastructure that I'm going to use. I mean, we briefly touched upon this in this panel, but the difference between now and then was that I mean, traditional finance, for example, of course, I can move that on the blockchain, and we have all the benefits that Rajesh mentioned, and I would say it's instantaneously, right? Instantaneously, I think that was missing in that list. But of course, I can as well get a few new use cases, even though we must agree or must say a true product market fit in an institutional grade. We haven't seen yet from these new cases, right? There's always this element of speculation in it. So I think the most probable case is that TradFi will be moving onto the blockchain and scaling there. And there the key difference is now that the regulator is making suggestions on how to treat this from a capital treatment perspective for banks. So if we look at Bank of International Settlement, we have seen a paper that has been consulted already twice, and it's now in the last phase of consultation on the prudential treatment of capital asset exposure. And with capital asset, they mean actually all assets on crypto environments, so all blockchains. And they say, well, if you do not want to have additional capital treatment on those assets, you must as well evaluate which blockchain infrastructure you're using. Because, and I guess that's something for Moody's to evaluate then in the future, is how does it comply with outsourcing questions, right? How is the material risk being managed? What if a validator just stops working, right? So the current perspective that the regulator from that point of view is taking is that unpermissioned is not suitable for a scaled in production grade for institutions. And I think that is not a trivial choice, and actually must be considered as well by the business units. Which infrastructure do I want to use, and do not leave it with the techies. Right? We have seen that in the past it has been left with the techies because they can build better things on that environment or better things on that environment. But coming back to the compliance part, the question is, well, should I do it? Right? And I think that's the key aspect on that.
If I get fast, what do you do in this space, Anya?
Yeah, happy to start, and thanks for the warm welcome. So Fidelity Digital Assets is a subsidiary of Fidelity Investments. Fidelity Investments, obviously, very, very large asset manager, mostly known as an asset manager. It's a pretty large financial services firm. Fidelity Digital Assets does custody and execution for crypto assets such as Bitcoin and Ether. We've been live since 2018, and so probably the first kind of large financial service institution in this space. And so we've seen, it's been interesting to be in this space for a while and kind of see the various cycles, right? And I think we have a strong belief in the long-term proposition of the asset class and of what the technology enables and the business models that it enables. So, we certainly continue to invest in this business with a view that, perhaps even though we have very volatile and very sort of extreme cycles in this asset class, that there's an upwards trajectory in terms of adoption.
Anya, how about you?
Hello, my name is Anya. I'm with GK8. So at GK8 we help banks, protocols, exchanges, funds manage their digital assets, whether it's Bitcoin or Ethereum or many other asset classes. And using GK8 software, our clients are able to safely store funds, transfer funds without the risk of getting hacked, interact with any DeFi protocol that's out there through an MMI integration, or do things like launch stable coins, or tokenize real-world assets. So we're not a custodian. We offer technology that allows customers to maintain their own private keys, because we believe enterprise customers need to control their private key at all times, and to be able to manage, store digital assets in a highly secure, unreachable way. And the history of the company is actually quite interesting. It got started by cybersecurity experts who hacked into a really well-known wallet in just a matter of days, and realized that what's on the market right now is just nowhere near secure enough to for banks or protocols or exchanges and funds to get into this space. So that's how the company was born, and over the last several years it grew into an enterprise-grade solution with a governance layer on top of that. And earlier this year we got acquired by Galaxy, which is a well-respected, publicly listed company in the space that does asset management, global trading and infrastructure. So we have a number of strategic initiatives with them. They're a large customer of ours, and at this point we're securing billions of dollars worth of assets through our combination of a deep cold vault, warm wallet, and a cash box, which is a unique innovation that we offer. So that's kind of the summary of who we are.
Very helpful, thank you. Christopher.
Yeah, hi, thank you. My name is Christopher. I run the institutional sales efforts at Uphold. Uphold's been around for 9 years, which in crypto time is a long time, and we initially focused on retail customers, but just like the industry is evolving and pivoting towards institutional clients, we've now rolled out an OTC trading desk for institutions, and we provide fundamental research. We're really focusing on altcoins, so we're trying to provide education and execution, which I think is really important in the space. When it comes to identifying tokens, we identify them early, we look for utility, and liquidity, which I'm sure we're going to discuss a little bit more later in detail, is key. When we're hoping for institutions to enter the space, I think the main two pivotal points are liquidity and security, and I look forward to the discussions later on.
And Eliza.
Sure. So I run the research department at 21 Shares. We are the world's largest ETP issuer for crypto assets. We have about $1 billion assets under management. And for us, education is key before entering into the asset class, and that's why when we talk about education and fundamental research, it's really music to our ears, because we really want to enable building a bridge into the asset class. We also have 21.co, which is our parent company, our blockchain business, where essentially we have a platform to tokenize assets as well. And this is really trying to build a bridge into the asset class as well from a technological perspective. So we're super excited to be here.
Yes. The investors, the clients that you service, yeah, what do they look like? What sort of spectrum are they on?
Yeah, it's pretty wide range. A little bit like what Eliza was saying. One thing that I have noticed, however, is the profile is changing. This is a market that, unlike traditional markets, started a little bit like a retail movement, right, post the GFC. And you've kind of seen kind of the inverse curve that you normally have in terms of adoption. And so you've seen, a few years ago it was largely retail and high net worth individuals. The high net worth individuals, some of them that have family offices, then started bringing in family offices. The family offices that then invested, the hedge funds started bringing in their hedge funds. And I think that's kind of the adoption curve. And I think you're starting to see some of that transpire into those large allocators, such as the traditional asset managers, the pensions. And it makes sense, right? I think those guys have been, they've not been on the sidelines. They've been investing through private equity, through VC, through some of the public companies, right? And so they, some of them have public sort of positions in some of those companies, but it's much harder to choose an equity investment that's going to be the winner of a particular, set of functionality in this space than to invest in the infrastructure itself. And so I think, to Eliza's point, certainly the infrastructure needs to mature, right? People quote, a number of reasons. Volatility is one of them, but regulation is another one. Security, operational risk. There's a lot of stuff that I think we need to figure out. And frankly, valuations, very few people have, again, educated themselves well enough to have pricing models around Bitcoin, around ETH, let alone sort of the long tail of assets. And so there's some things that, that's what institutions do, by the way. They should bring their clients kind of portfolio construction tools and model
modeling and that sort of thing. So I think as those things slot into place, you know, the investment thesis around, okay, we think this technology is, you know, has explosive growth potential, and instead of investing in individual companies, we want to invest. Like, I think that's something that we hear a lot, and so I think it's kind of a matter of time, and it's going to go through that kind of, you know, ticking chain of demand as people demand their pension managers, their insurance companies, etc., to have a position because they can't, you know, because it's going to become untenable not to be in it rather than too dangerous to be in it, which I think is still where we kind of are now for some of those investors.
Coming out, the market spike that caused, which shows two things: a lack of liquidity still in the market, but also gave us a taste of what is to come once these products. And I'm really I want to say when, not if, because I'm convinced that they will. And it's a wrapper that institutions are familiar with. I want to come back to the point that, you know, we will know here how to navigate a wallet and how to do crypto transactions. Institutions, just by buying an ETF, they don't have to do that. And that's familiarity, it's security. And so to answer your question, yeah, I'm really excited about it.
Manuel, I'm afraid I have to put the same question to you, so I know Fidelity is in this race.
Yeah, so I you know, because Fidelity has an ongoing filing, I can't comment on the US ETF directly. What I can say, I mean, I agree with Christopher's sentiment around, you know, the familiarity of certain wrappers, right? And so, you know, it's no secret, like Fidelity has got, you know, various Fidelity asset management arms have got other products in market in other parts of the world. And it's no secret that we think, you know, different investors will have different ways of accessing the market, and it's important for those access points to be sort of open in a well regulated way, right? Whether there's huge amounts of liquidity waiting to kind of pour into the market, I think, you know, there's different factors, including sort of macroeconomic conditions, etc. And, you know, we have a lot of research around what some of those factors are. So it's difficult to tell. I certainly wouldn't want to speculate on price, etc. But as again, like thinking about long term, having good market access points is a very important thing. And so that would be a positive development in that sense.
We're slowly running out of time, so I guess my final brief question.
So we have some data on this. So I try and go back to that. Otherwise, like, we're all personally biased. I'm certainly very biased because I work in this space, right? But what the data tells us that we typically run this study. We have to run this study once a year, and we get an independent company to come in and survey. You know, not one of our investors, but globally surveyed in excess of 1,000 investors. So it's a pretty wide range, all the way from family offices to sort of defined benefit plans and that kind of thing. And it goes back to that barrier component. So on the sort of positive of like what makes you come into the space is the kind of, you know, disruptive technology play, the lack of correlation, although in 2022 that dropped off somewhat. You know, and so those are sort of the two main bits. Most investors, like by some margin, most investors that we survey think that digital assets are appealing. And if they look at it in sort of the 3-year time period, I think that goes up like 90-something% of investors think that they have a place in a portfolio. But then they also tell us why they don't have it in their portfolio yet, right, or the barriers for either new investment or further investment. And there's some work to do, right? Like some of it is volatility, and actually I think, you know, volatility kind of goes away with institutional adoption over the long term. But there are things like, you know, fundamentals of security clearly still a hot topic. We probably thought as an industry in 2021 that we were kind of done with it, and clearly the market events of 2022 show that there wasn't that level of maturity necessarily. And then other sort of institutionalization issues. I think valuations, as Eliza was mentioning, is a big one. A lot of investors and their research teams haven't quite trained up to be able to evaluate these assets and build sort of pricing models around them and that kind of thing. So it is those kind of barriers of, you know, regulatory environment, institutionalization and maturation of the asset class. And I think as those drop off, then more and more investors start coming in.
Yeah, Eliza, very briefly, what will it take?
I think, for digital assets or crypto assets, I think there are two ways to think about how to reach mainstream adoption. We haven't crossed the chasm yet, and I think for the investable assets, so Bitcoin, Ethereum, and the long tail, is really providing an easy access to the asset class through, of course, exchange-traded products or any other type of regulated exchanges where people can have access to the asset class more easily and safely as well. And then for the technology itself, we have a long way actually to cross the chasm. For us, the way we actually describe the stage at which we are for digital assets is actually like in the early 1990s, where we had the web pages loading for like 5 minutes or taking hours to send an email. Today, to transact on the Ethereum network, it takes 50 transactions per second, right? Compared to the Visa network for 2,000 transactions per second, we are not there yet for having that scalability that can compete against payment networks. But there is a lot of technologies out there that are super exciting. So I would say, to summarize, for the technology, we need more scalability, interoperability, cybersecurity, and easy user interfaces as well, because some of them are honestly to some extent in areas to see. So we're quite excited to see more and more innovation on that front of the technology.
I'm Bilal Jafar. For those who were not here for the first session that I did earlier, I'm crypto and fintech correspondent at Dow Jones in London. And today we do have a very, very interesting topic to cover. And we do have some of the prominent names in the industry to discuss the future of institutional crypto trading. So first thing first, please introduce yourself and then we'll do a round of questions. Please, with you, Chris.
Thanks, Bilal. Chris Arudia, I'm with Winston. We're a hedge fund and market maker. Also have a OTC desk. Looking forward to the panel, giving our perspective as traders in the market since 2017. Crypto native, but a regulated fund. So really looking forward to the discussion.
Thank you, Bilal. I'm Silvina Moschini. I'm the founder, president, and chairwoman of Unicoin. Unicoin is a self-regulated public reporting company that is backed by assets, and I am also the founder of Unicorn Hunters, a reality live TV that scouts companies with unicorn potential and allow people from the audience to invest in them.
Thank you very much. My name is Christopher Siedentopf. I run the institutional sales efforts at Uphold. we're not an exchange, we're a liquidity aggregator, and I guess liquidity is going to be one of the key focus points for today's discussion. In my previous life, I spent 20 years trading equities, so the infrastructure that we're hopefully building in crypto is very familiar to me.
Good afternoon, everybody. My name is Simon Forster. I am one of the co-heads of the digital assets business at TPICAP. TPICAP are the world's largest interdealer broker, so we're middlemen intermediating the world's financial, energy and commodities markets. The digital assets business within the firm began back in 2017 based on two key theses. One, crypto would become an institutionally investable asset class, and if that was to be the case, our clients, who are banks, hedge funds, asset managers and pension funds, would look to TPICAP to service them. And the second area is around the technology that underpins the asset class. We expected to see significant disruption to financial market infrastructure for traditional asset classes through tokenization, and that's something that we have a keen focus on as well.
So just to start that market, but what we're now seeing, I think, is the emergence of, the likes of TPICAP and Fidelity and others coming in the space, or have been in the space a while, building out solutions. We're seeing banks exploring how they come in the space. Certainly banking as a part of the whole infrastructure is still something to be solved, and something that I certainly hope tier one banks are looking at how they come in. I think the other side is prime brokers. You've got, the prime broker model that exists in the traditional space, not so fully built out to date in the crypto space, but coming that way as well. And then there's the whole settlement and Simon's point about segregation of assets, and we've all been through the storm. Concentration risk and counterparty risk were things that we didn't, let's say, coming from a crypto native side, didn't necessarily think about before, but now it's top of everyone's agenda. Who am I trading with? How are my assets being stored? How are my assets being moved? What are the sort of protections around that? So, all of those types of things are coming in on the institutional side versus the retail side.
Hello everyone. So basically Corium is a Cosmos SDK built chain, and we focus on enterprise solutions. How? Our thesis is that mass adoption will not come unless we give some sort of control or tooling to businesses to just adopt blockchain technology seamlessly, effortlessly, and in this way we are trying to bridge compliance and decentralization. So there's three things that we have that are particular to Corium. The first one, we have smart tokens. Smart tokens are individual, the easiest way to explain it, tokens that are wrapped around smart contracts and they can execute functions from the implementation. Second, we have IBC interoperability. Being in a Cosmos chain, we have a few relayers set up, which means that any asset that you mint or issue on Corium can flow to other chains without having to rely on a third-party bridge. Third, we are ISO 20022 compatible, which means that all of our messaging is standard. It's in alignment with what banks and financial institutions globally are using, which is a big attraction to institutions that just want to be playing around in a safe environment for transactions. The third one is a deterministic fee model, which basically says that the higher the throughput, the lower the fees. And being in Cosmos, everything is horizontally scalable. So excited to keep building. We're here sponsoring the hackathon and also the conference. And yeah, happy to give an overview.
Hello everyone. How are you today? Are you enjoying the event? Good, me too. Let me introduce myself. My name is Carolina Holushova and I am Chief Administration Officer of Codego Group. This is my first time at the event, second time in Barcelona, but for Codego it's already the fourth time, so we're very, very excited to be here. I've been working with Codego for some time, and I have to say that our work is very dynamic. My day is never the same because we love innovation, of course, and
our CIO comes to me at least once a week and tells me, Carolina, I have an idea, let's discuss about it. So then you don't see me for the rest of the day. Talking of innovation, it's been quite a busy period for us. We've been working on new solutions to bring up to the market, and I'm really glad to present them to you today. First of all, I would like to also introduce you my virtual colleague David, who's going to introduce you Codego as a company. So David, are you ready?
Absolutely. Carolina, I am ready to rock. Hi guys, welcome to European Blockchain Summit. I'm David, Virtual Senior Key Account Manager of Codego. Nice to be here with you, and I'm very happy to present my company. Codego is a fintech company that builds white label solutions for financial institutions and banks. Coming from 10 years of experience in crypto and financial market, we evolved into a leading fintech company, offering top digital finance solutions such as core banking systems, banking as a services, card issuing, KYC as a services, acquiring POS terminal, face payment. Okay, so now let me pass you back to my colleague. It was nice to meet you. Hope to see you at our stand.
Thanks, David. That was a very nice introduction, maybe better than mine. So I would like to add also that Codego is present in over 10 countries between Europe and Middle East. And we've currently opened a new office in Italy where I am glad to be based. As a company, our vocation is, of course, innovation, because we are constantly trying to push boundaries in order to bring most innovative solutions to the market. Since, of course, we want to deliver fresh and efficient solutions to the financial market in order to bring the digital banking experience to new level. Today, my presentation is about the revolution in gateway payments, since this is really, related to quite a significant transformation in the way people make payment today. And since Codego is offering different solutions, let me take you through it. To expand. In this case, we provide the backend for you, but also SDK frontend, which is fully customizable thanks to our sandbox. And of course, you will get the cards. So to summarize, we can basically provide any kind of card program related to cryptocurrencies. And with Codego technologies, you're ready to go live within a couple of weeks. I would really like to highlight that you can have this service in any country with us, thanks to our deals with multiple providers located worldwide. So wherever in the world your clients are, you can have the cards with us. We aggregate all of this in one card program. Last but not least, you don't need to have your own license. You can work under our distributor agreement and provide financial services with our license or our partner's license. Next service is Crypto to Bank, which is very popular for individuals. It's very, very simple. It's a very fast way to convert or receive crypto in your bank account. So all you need to do is basically go to our website, create an account, provide your wallet address, and then from there you can receive currencies in your account instantly. So once your wallet receives the crypto, you receive the fiat currencies in your bank account with SEPA.
Customers, with clients, through NFTs, but not only through NFTs, no? I mean, it can be through any kind of digital asset or any kind of technology driven by Web3, blockchain, etc. And I have the pleasure to introduce you to Shannon Snow, Chief Operating Officer from World of Women. I'll ask you afterwards to explain a little bit more about your project. We have also Jordi Montpart from Barcelona. You have done an interesting case use. We will have the pleasure to hear more about that. Also, Wen Lin from La Liga and Pablo Monti from BingX. And I wanted to start the discussion asking, for instance, Wen, if you like, if you can share some background about how these technologies or how these NFTs has been used in a context like La Liga or in an environment like a sports environment in order to boost this kind of engagement with fans, clients, etc.
Hi everyone. I would like to share my experience more in the product side because the first complexity that we can afford in all these Web3 ecosystem is the complexity of using the technology in all the products and how to make user-friendly products for the fans and to increase the engagement through them, because blockchain is not only NFTs. We probably are going to talk to another uses or case of uses of this technology that will increase the value of the products or what we can offer for the engage. And going further than only, for example, in the case of football, more than the 90 minutes of the competition, we can go also try to keep users to create some sentiments, relations with them, to feel them more close to their clubs, competition, footballers.
Thank you, and Pablo, also regarding your role here at BingX and your previous experience related with the sports, etc., what do you think would be the role of the exchanges in this market in order to facilitate, the access of the users to this?
Hello everyone. Now you can hear me. I can hear me loud. Back to the question. We all can agree that nowadays NFT is some kind of a cursed word, which I find really inaccurate because we are only paying attention to one of the uses of NFT, and it can bring a lot. I come from the sports, esports, and gaming world before joining an exchange, so I'm really into this. And what I see related to crypto exchanges is that they are, and I don't want to use the they, used to be part of it just as a marketplace. And there are many ways in which crypto exchanges can relate. Nowadays, BingX is not into the NFTs business, and that's probably why. Because I believe, and BingX believes that crypto exchanges should be the gateway for new crypto users, new Web3 users, new blockchain users, and that should be the task. So the ideal, in my opinion, for crypto exchanges to relate with NFTs is being that gateway. I mean, you can bring a lot of things into the conversation. You can use the exchange as your wallet for your NFT tickets, for your NFT collectibles. I mean, there are tons of ways to relate besides just a plain NFT marketplace. And I believe that's where crypto exchange should go. Nowadays it's not the reality, but I hope that this is going to be changing within the few next years.
Okay, thank you.
And to increase the engagement through them, because blockchain is not only NFTs. We probably are going to talk to another uses or case of uses of this technology that we increase the value of the products or what we can offer for the engage, and going further than only, for example, in the case of football, more than the 90 minutes of the competition, we can go also try to keep users to create some sentiments, relations with them, to feel them more close to their clubs, competition, footballers.
Thank you, and Pablo. Also, regarding your role here at BeingX and your previous interesting to explain this beautiful project you are involved right now, that is women, World of Women, and after that, maybe Jordi, you can explain also a little bit the collaboration you've been doing in order to also promote women's football this project that you have been doing together. I think this could be also a good case study to illustrate what we are talking about.
Absolutely. Hi everyone, I'm Shannon Snow. I'm COO of World of Women. For those of you who may not be familiar, World of Women started as an NFT collection and became a movement. It was started on the idea that women should be represented in Web3 and the metaverse in order to increase access and of course bring on the next billion users into this space. It was the first collection that had a woman founder, woman artist, and women-focused collection, and ended up becoming the #8 all-time NFT collection and #1 mission-focused NFT collection with over $350 million of trading volume. Since then, we're really focused on continuing to grow access through NFTs, but most importantly through community, to ensure that we are spreading the new adoption of Web3 technology, new ways that communities are connecting digitally. And part of how we're doing so is collaborating with incredible brands like FC Barcelona to think about how we can help companies and collaborate in really surprising ways to engage fans in this new era.
Hi everyone, I'm Jordi Lombard, Director of Research at FC Barcelona, and I have responsibilities on AI, artificial intelligence and blockchain technologies. Regarding blockchain technologies, together with Jorge Pina, who is here, and Anusole, we're working on that. And for those who, for many of you, FC Barcelona is a super top football club, but for us, it's much more than this. So it's an example of, for you could say that it's a physical DAO because it belongs to the members. We have 150,000 members, and they are the owners of it. And it goes beyond sports. It has to do with we have a foundation. It has to do with the fact, for instance, that we had UNICEF as a sponsor, and we paid for that. Many things, and we coincide. We have the same. The same idea as World of Women, that technology is to male and football is to male. So the magic was perfect between, let's say, both institutions. Let's do something amazing together for women empowerment. And we have many examples in FC Barcelona. One example is that the team that we are much proud of today is our women first team. It's amazing. We have the best player in the world, Alexia Putellas, and probably the new best player in the world, Aitana Bonmatí, will be also our player. But also we broke the record of attendees in a women match 1 year and a half ago, and we did it 2 times in a row. This is amazing, and we want to celebrate these things. And technologies, for us, they enable to illustrate our emotional history, plenty of different stories, narratives, experiences, utilities, accesses. It's not about speculation. It's about providing users, fans, with digital experiences.
Okay, thank you. And Simon, good. Well.
And we paid for that, many things. And we coincide. We have the same idea as World of Women, that technology is to male and football is to male. So the magic was perfect between, let's say, both institutions. Let's do something amazing together for women empowerment. And we have many examples in FC Barcelona. One example is that the team that we are much proud of today is our women first team. It's amazing. We have the best player in the world, Alexis Putellas, and probably the new best player in the world, Aitana Bonmatí, will be also our player. But also we broke the record of attendees in a women match 1 year and a half ago, and we did it 2 times in a row. This is amazing, and we want to celebrate these things. And technologies, for us, they enable to illustrate our emotional history and plenty of different stories, narratives, experiences, utilities, accesses. It's not about speculation, it's about providing users, fans, with digital experiences. We provide them with content, but the content is mainly created by the people, and they tell us, for instance, which is the next match that they would like to see in Discord being broadcasted there, etc. So instead of assumptions, listening. That's super important.
Yeah, that's right. I've read something about the new metaverse of Barcelona. I don't know if this is a project that is still ongoing. And how do you think that these NFTs will play a role in, for instance, in a future metaverse or a kind of virtual environments that maybe a club like Football Club Barcelona is developing?
So let me give some context, because sometimes I think every one of us confuses, let's say, blockchain technologies with Web3. These are two different things. For Web3 you need blockchain technologies, but blockchain technologies is something that goes, there are many things that are not Web3 related. For instance, in FC Barcelona we are using blockchain technologies for referendums. We are using blockchain technologies for the traceability of ticketing. So it's a solution that is amazing for many things. And particularly regarding NFTs, is amazing because it provides ownership to the digital assets, and this is super important. But this is not exactly Web3. Web3 is an idea that we have, all of us we have, in terms of decentralization and taking out the middlemen from the middle. Yeah? And this, we hope that someday will happen. But we are not ready, we are not mature enough, at least with our funds, for let's say to target them as Web3 users. Our fans are basically Web2. They don't care about the technology. They care about the experiences. So whenever the digital experience is better than the physical or the analogic one, they will take it. It's super simple. Okay, so then what we have to do is provide them with digital experiences enabled by blockchain technologies, because we need them, that are amazing for them. An example, what we did also with plastics, we just released a collection of NFTs, around 3,000 NFTs, and to support projects of plastic recovery in developing countries. So the utility attached to this NFT, that was a Barca NFT, was to be supportive, which is an utility. And people that is paying for it, if they know that 50% goes to being supportive, it's okay, it's done. There is no need of speculation. We need a narrative, values, and then using blockchain technologies as a technology. The good thing, the experience has to do with the narrative, with emotions. And then NFTs is only the first step. But we know that NFTs, avatars, marketplaces, play to earn, metaverses, virtual real estate, virtual shopping are products and services that from blockchain technologies that will be very appealing. So we really believe that we are close to, let's say, to the metaverse, but not this metaverse being super immersive, because we know also that using, let's say, virtual reality and special classes and these things is not affordable for every single one. Okay, we know that, for instance, my children, they play Fortnite. It's a kind of metaverse, it's violent, okay, but it's a kind of metaverse. It's a 3D recreation of a virtual world where there are interactions between avatars, their experiences, their emotions, and they take it. So that's the metaverse we want to approach, let's say, taking out violence and providing, let's say, contents of FC Barcelona. And we hope, together with Holga and Asole and many people in the club, that we are close to it. And let's say 20% of our fans are women, so it's really an opportunity to grow. And engagement is super important. Money is the last thing, although it's important, but it's the last thing. Don't start a project thinking that you will make money. Think about the purpose and the values, and so answer the why, and then you will see.
And also, as you said before, it's important to connect it with the own values of the companies, no? Not only use technology by just being in the hype or this is something that is a hot topic right now, but also check if you can connect it with the values as a club like Barcelona. Thank you.
From my side, I will advise that putting on first the user or the gamer or fan or whatever before the product, because sometimes it's get like a lot of mess, very difficult prototypes, no one comes to deal with it, and then the consumers are not going to understand which is the objective to have it. So because how many times we had here like, what is the point to have it there? In referring of the NFT, right? So make things with a long-term vision. Try to curate everything that you're doing and think about the consumer will be a key point.
So we bring product and technical expertise to early stage and growth stage companies. So with that, I have the pleasure of introducing a bunch of technical experts and product and business leaders here with this panel. Before we get to our esteemed panelists though, we have our topic, which is onboarding the next billion users to Web3. So as we had some of our early conversations before the panel, we were wondering, okay, first of all, what does it even mean to be onboarded to Web3? Is just having a wallet enough? Is connecting and using that wallet for some purpose enough in terms of engagement? Is it the total number of users who have engaged with Web3 at all? So we heard actually in an earlier panel today a clue which said that about 75 million users worldwide, about 75 million people have engaged with Web3 in some way, shape, or form. So we'll talk about that. But the audience participation part was, let's take a guess as to how many people we have in terms of connected wallets total. And there's some debate on this, but we looked at a few different sources. So I want everyone to just kind of stretch out, put your hands in the air, like, for now, okay. Now keep one hand in the air. Okay, everybody's got one hand in the air, this is good. All right, cool, so let's think about total number of wallets. And again, there's some debate here, so I'm just gonna use log-based 10 numbers here. And then we're gonna say either 10,000s, hundreds of thousands, millions, tens of millions, hundreds of millions, or a billion, and we're done and we can all go to tapas right now. So today, how many wallets do we think are connected, created and connected today? So keep your hand in the air if it's tens of thousands. Okay, we already think, some people think maybe not even. How about hundreds of thousands? Yeah, okay, good, keep your hand in the air if you have that, yeah. Keep your hand in the air if you think there are millions. So anywhere from 1 to 10 million. Okay, all right, so keep your hand in the air then if you think there's tens of millions, between 10 and 99 million wallets already. Okay, now we're all down to the last few. So we have, and then, okay, so if anyone think we're above 100 million wallets currently. Okay, great, and then a billion, we can go home? These people are just hungry or thirsty, I think. They're just like, let's get out of here. Okay, good, so that's kind of the landscape. So we peaked at about the 1 millions, which I think is about right, where, Evgeny, I think you mentioned, what did you hear as the latest number in terms of total connected wallets about?
I think it's, my assumption is a few hundreds of millions.
Okay, all right, cool. Bogdan, did you have one? We talked about this actually at the happy hour yesterday.
Yeah, well, it's hard for me to think globally because we are like specific, so I would agree with you.
Yeah. Well, actually, we looked up, I think we had data from Fireblocks and a couple others that said 1.6 million was all we had in terms of wallets. So it's actually much lower than we think. And then again, there's some wallets that are created for us as orphaned and all that stuff. But that gives you an idea that we have a long way to go. And so with that context, we have a long way to go, and then where we sit today, I'll turn it over to our panelists in a row here, and maybe you can just introduce yourself, And with the context of what we just discussed here, maybe talk about what are the metrics that you use today to think about adoption and engagement within your organization. So I'll start with John.
Hey, I'm John Woods. I'm the CTO at the Algorand Foundation. And Algorand is a killer layer 1 blockchain. And so, my previous work, I was the lead architect on Cardano. I led architecture and applied cryptography for Charles, and then prior to that I worked on Ethereum. I've also had jobs in the normal world as well. I worked for Citi and Ericsson and other normal companies. I think at Algorand, we think of adoption as volume on chain, so the number of transactions, of course, and of course the number of active wallets. Ultimately, I think that that's part of our strategy. If you look at the things that we've been doing over the last kind of year, it's focused on reducing friction for the user and making the developer experience absolutely great. And so, if you can make it easy to build on these platforms, and what are things like Algorand, Ethereum, Cardano? They are open source operating systems. They're decentralized operating systems. They execute code, but they do so, rather than right in front of you on your laptop, they do so in a decentralized context. And so, just like regular operating systems like macOS and Linux and Windows, you've got to make it easy for people to realize their vision and to build their enterprise products on your platform. And so, with that, yeah, I think I would focus mostly on transactions per second and indeed the number of active accounts.
Hey, hello, I'm Bogdan. I'm in startups for maybe 15 years, so I'm like doing startups for my whole life. Initially I was like a developer there, maybe then a senior developer, and then the team lead, and then CTO, and then CTO co-founder, and now I'm CTO co-founder of a Web3 company. Yeah, we're Unstoppable Domains in the NFT field. We do naming systems based on Ethereum and some other chains. Well, the way we adopt people, I didn't want to go into bare example, but I have to, is that, for example, what we do is we make sure people can buy some NFTs without having any other token, right? This is a very serious problem for people to onboard, that if they want to buy some NFT, first they need to buy Ethereum, right? And we solved at least that problem, right?
Working? Great. Hi, I'm Tim Walther. I'm group manager for Web3 and Metaverse at the Volkswagen Group. So Volkswagen Group is probably one of the brands here in the room, and probably a lot different to everyone else here in the panel, because actually what we're talking about here is not our natural habit. We sell cars. Volkswagen Group basically is not only the Volkswagen brand, but it's also Audi, Porsche, Skoda, Lamborghini, Bentley, and a few more. So I think we are about 12 brands. But what we've seen a bit more than 2 years ago, that with basically the Trojan horse of NFTs, we've seen the potential of Web3 and what we can actually, and how we can use it to engage with our audiences in a much better way than we did in the past. So I'm looking more with the lens of a marketing person here, less with an investing opportunity, obviously. But even there, we see great potential, and we've started a lot of tests, a lot of innovation projects, and a lot of serious projects within our brands in the last 2 years. And yeah, this is me.
Hi everyone, I'm Evgeny. I'm the Chief Product Officer at Cryptology. I'm for a long time at this industry, since 2013. I had my own company back at the days of named purchase with me. It was about how to accept Bitcoin, Litecoin, converted in BTC to fiat. So I saw the adoption of blockchain and how it's adopted by the end users. So I was back actively into blockchain industry back in 2017-18 on the boom with the ICO. I was co-founder of SEDEX. This is a diamond exchange. So if we are speaking about adoption, we were saying blockchain is not about only trading. Blockchain is resolving problems, day-to-day problems. So at Sedex back days, we wanted to resolve how people trade diamonds. Basically, diamonds is unfungible assets, very tiny, very expensive. Blockchain was looking back days as perfect solution as NFT before it was popular. And then I saw the next adoption. We're working on project named Footies for sport events, sport organizers. So today is Barcelona playing in the Champions League. You will see very active secondary market outside the stadium. So blockchain is exactly how it can be resolved. The problem of the match day, the reselling tickets, and creating an experience. So as I said, like blockchain can be with us in many domains and meet us on day to day. In the last year and a half, I work in cryptology with one focus. So according to the World Bank, about 1.7 billion people around the globe are unbanked. We look at the countries such as Morocco, Egypt, Vietnam, Mexico, huge population and huge percentage of unbanked. So still the question remains, how many people can get access to the services? How many people can access to the money? And doing the day-to-day actions such as paying for electricity bill and so on. So from my side, the main parameter is how can we educate the user with simple UI, and still it's a trade-off always, right? UI versus security. So to stay secure, to give good experience and still be able to onboard people without non-technical knowledge and give them access to crypto trading and new opportunities.
No, I think Algorand's had some major partnerships. We partnered with FIFA and other organizations of that size. I don't think it's very fruitful, to be quite honest, if I'm being honest. I think it leads to some excitement for a week or two, and then it goes nowhere. I think a lot of these organizations are more interested in potentially exploring the technology, but they're not fully committed to it because they don't fully understand it. And indeed, how can they be fully committed to it when there is, as you've already described, only a couple of million people who are actively using it? It wouldn't make sense. And so our focus is more grassroots. Our focus is on making a platform that's available for everyone. Yes, it's important that the platform is suitable for enterprise-grade applications, and enterprise is very much part of where we see major applications on the chain. We see them as being enterprise-grade applications for major firms. But also, just like Linux, we got to make Algorand, I think the Linux of blockchain, the platform that people choose to build on as the individual. And so partnerships are very important. Still, I think more important is the individual. And the points made about the unbanked, we enjoy in this part of the world, in Europe, in the US, certainly we enjoy a financial system which is incredibly mature and generally quite inclusive. But that's certainly not the case in the majority of the world.